Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money weekly roundup, our debrief on the biggest stories in markets and economics. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, author of the Money Distilled newsletter and senior reporter at Bloomberg.
Right, John and I would like you to know that this is not a bonus podcast. It is not an emergency podcast. It's just our normal Merryn Talks Money weekly roundup. Right, John? We are not panicked in any way whatsoever.
We are entirely calm.
However, we are also going to keep this short and snappy because our producer would like to get it out before Donald Trump wakes up. So it's valid for at least half an hour. Also fair?
That's a wise decision. It's not a bonus or an emergency podcast, but it is a rapid podcast.
Not panicked, just rushing a little. Right. So we should, I suppose, set the scene. Because obviously there is only one big story, not that we're panicked, but there is only one big story, which is the coming and going and coming and going of the tariffs. So we're 8 days on now from Liberation Day. How many trading days since then? 7.
That sounds right, yeah.
Hang on, are we on the 8th trading day? Up, down, up, down, up, down. Odd things happening all over the place. Markets going down, 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 down. Then suddenly yesterday, 6:18 p.m. UK time, we find out that there is going to be a 90-day pause for most people, not for everybody, obviously. The 10% stays and China gets 125% of tariffs. Now, this was amazing. Everything changed instantly when the US market closed last night. The Nasdaq was up over 12%. The S&P 500 was up 9.5%. So that means that while they're both still down year to date, look at them over a year and you wouldn't know that anything has happened. The Nasdaq is now up over this, or closed last night, up over 6% over 12 months. And the S&P was also up over 12 months. So if you were the kind of person who only looked at your portfolio once a year and you chose last night to look at it, you would think that absolutely nothing had happened at all. In fact, you'd probably be pretty pleased that you got 6% over a year, given how expensive the US market was, right?
It really is a good lesson in, if you are a long-term investor and you are comfortable with your investment plan and you've thought it through, then looking at your portfolio relatively rarely is a sensible decision in terms of being able to sleep well at night and all the rest of it. I appreciate that would have been difficult if you pay any attention to the news at all. A lot of the time it really is worth just parking everything and staying calm, and that's the reason to make sure you've got your financial affairs and financial goals in order while markets are not doing things like this.
God, he's so sensible. If I didn't have this job, I would have been trading manically for the last 5 days. Anyway, by mid-morning today, and I'm sticking with mid-morning because who knows what's going to happen this afternoon, the FTSE was back up as well, 5% up, so back to kind of evens on the year and up about 2% over 12 months. But also, and here's John, why maybe you should trade this stuff. By mid-morning this morning, 16 FTSE 100 stocks were up over 10%. So if you spent yesterday afternoon making a nice list of cheap UK high-yielding shares, you'd be really, really happy today.
Oh, yeah. I mean, this is the other thing. Particularly if you're buying individual stocks, then you should already have a watch list and an idea of what price would tempt you to buy these stocks. There's lots of opportunities for people who did manage to stay calm and who had the kind of optionality of owning cash. And also anyone who's held a bit of their portfolio in gold would at least have had something to look at on the down days that wasn't collapsing.
Absolutely. And that slots very nicely into the We Told You So section of this podcast. We told you so. We did tell you to always hold gold because it'll help you out in the tough times. Anyway, so on to what's going to happen next, or what is kind of maybe going to happen next. You can have the faintest idea. But let's start with this question, John. Is Trump winning? Did he blink? Did he fold? Or is this what he planned to do all along? I mean, you can tell a lot about the biases of every financial and political commentator out there by the way they've started their columns and their articles on this today. But when I look at it, I'm not sure I see anything particularly straightforward. I mean, the plan was always, as I understood it, the idea was always to take action mainly against China. And here we are. There are still massive tariffs against China, and everyone else still has a 10% tariff. So the problem remains. This is still a huge global upheaval. It isn't over. It's not solved. These tariffs have to be paid. The supply chains that everyone has had on the go for the last couple of decades and the shift towards a free trading environment that we've had on the go for the last 80 years, this is over. So whether Trump has called a pause and why he called that pause, the basic situation remains the same. We are at a massive turning point in global economic and political history, and those dislocations are going to change everything around us, and we can't tell quite how. Am I the mad one, or is it the market?
No, you're right. Or certainly I agree with you.
That means I'm right. If we agree, almost always together we're right.
Yes, yes, hopefully. Yeah, because look, in terms of the tariffs on China, we're at the point where the number actually doesn't matter. You've effectively declared a trade embargo. And that's a really big deal. I mean, obviously, Niall Ferguson came up with this term chimerica for what had been going on in the last 10, 20 years since the World Trade Organization, China was allowed into it, which is the idea that Americans bought cheap consumer goods from China and China invested in US treasuries. And clearly that's gone. That is definitely gone, unless there's some really an actual U-turn. And as far as all the capitulation stuff goes, it's kind of down to your own bias. I can't see into Trump's mind, but what you can see is that he started 10 days ago from what looked like an absolutely, to most people, crazily thought through way of putting on tariffs and in a very aggressive position. And now he's retreated to where people thought he was going to be, except that actually I don't think anyone thought that there would be 125% tariffs on China. And so actually he's further forward in his agenda than he would have been if he'd just gone straight for this 10 days ago.
Also, I mean, he did say that he wanted everyone to negotiate, and you look at it now and it does look like this big pile of shock and awe has actually done that. Everyone's got their flat 10% except for Canada and Mexico and China. And pretty much everyone is coming to the table to negotiate. I mean, we're told that 50 out of 60 odd countries are having a go. There was an EU tweet yesterday saying how much they looked forward to finding a way to get to zero tariffs with the US. Everyone's coming to the table. So maybe whatever the headlines say, maybe he's kind of winning.
I wouldn't go so far as to say that yet, just because I don't know how this is going to unfold. And I don't want to fall into the trap of kind of basing things on where my own sympathies lie one way or the other. Apart from anything else is American politics, I don't really have sympathies one direction or the other. But I do think this idea that Trump's an idiot, that's a waste of your time. If that's what your mentality is, then don't spend any more time thinking about this, because you're not going to learn anything. The fact is, the world has changed. China and America's kind of trade relationship has been severed. And America has now managed to impose a 10% tax on every import that comes into the country, which is another thing that will be interesting to see how that unfolds. You know, there is one argument that this is effectively backdoor way of introducing a consumption tax in America. Now, you can't do a VAT because obviously, you know, Americans don't like taxes, and fair play to them. So this is a way to impose a 10% VAT that looks as if it's being paid for by exporters, and to whatever extent it is paid for by the exporters, that's a win for you as a country. But it is also a sum at least is going to be passed on to consumers.
Yeah.
And I think that's a really interesting way to look at it, because it also shows that the administration is aware that America has got a debt problem, and they are going to try to address it in some way. Whether that works or not is another matter. But the point is, all of these imbalances have been leading up to a moment like this.
That's the absolutely key point. We've been talking about this, and I wrote about it a few weeks ago, effectively saying he's a catalyst, not a cause. Yeah. Of course, everything Trump does escalates, changes, shifts the direction to a degree of where we're going here. But the fact remains that we've been gearing up for some kind of trade war between the US and China for a long time now. And there's anger towards globalization, anger towards the inequalities or perceived inequalities driven by globalization has been underway for some time. And actually, electorate after electorate after electorate has asked their leaders to do something about this, and of course have been roundly ignored. And I did write the other day that the tariffs are America's Brexit. And I suppose you could say that we voted for Brexit, but our leaders chose to ignore what we wanted or what the UK wanted. With Donald Trump, they're kind of getting what they're asked for.
Up until 2008, the kind of anger was papered over by rising house prices and kind of abundant credit, etc. And then whenever the financial crisis came along and everything blew up, sufficient people felt they were losing out from the system as it was to start getting angry about it. And it wasn't until 2016 that people basically get fed up of business as usual politicians promising to change things and not changing things. And that's whenever we got both Brexit and Trump elected for the first time. Even there, with voters taking quite radical action, nothing has been done fast enough for their liking. So this is a point where that's it, it's coming to a boil. So Trump's actually just standing up and saying the quiet part out loud, as they say. And people don't like it because it upsets the kind of the establishment view, and they're not used to someone speaking so undiplomatically, putting aside any personal qualities that Trump has or hasn't. But the fact is that some kind of big change is what people have been asking for, and now they're going to get it whether they like it or not.
Like it or not. I suppose that we're supposed to talk about markets. So the key thing to talk about here is what on earth is going on in markets. We've talked before about the fall in US markets so far this year. Sure, related to things that Donald Trump's administration have said and done, but coming anyway because of this massive divergence in valuations between US markets and other markets, which we were told until relatively recently was down to US exceptionalism, US perfection, everything always going right, AI, etc. And whether Trump or no Trump, all those things would have begun to crumble over this year. So this is as much about that valuation problem than about anything else. And that valuation differential remains. So regardless of what happens next, it still makes sense to expect the US market to come off over the next year, 2 years, 5 years, whatever it is, until valuations return to some kind of norm, because now we know that the US is not perfect. Well, I think we knew it before, but apparently not everybody did. We know that exceptionalism never lasts that long, and we know that every time you hear anything like the word exceptionalism, you should immediately get out of whatever market it is. I mean, we're old enough to know that, right?
Yeah.
So the simplest thing to say about this is that regardless of everything happening around us, US stock markets are still expensive. Other stock markets still offer value. And if you're moving into a difficult environment, why would you not want to hold the markets that start at the right price rather than the markets that start at the wrong price?
Yeah, definitely. And I think that's going to, whatever else happens, it's very obvious to the people who believed in US exceptionalism that US exceptionalism is now over. So I think you can expect capital to move out of the US, or rather in relative terms, you can expect the rest of the world to catch up to the US. There's another interesting question over whether this is a time for having an element of home bias. We haven't seen it overtly yet, but this is the sort of environment in which capital controls are something that people will be looking at, and that's just worth considering. I don't know how extreme those controls might get, but we're now in a world where if globalisation is rolling back or stalling or whatever, and more borders are going up and more friction is going up, then you want stuff to be nearer to you. And that includes your money to an extent. I mean, I'm not saying you don't have 100% of your money in the UK, but the point is, wherever you live, you might want to think about actually what are the implications if other countries decide that actually we're going to put a tax on this or a tax on that, or your own country says if you don't keep money in the UK, for example, then it's going to be treated less favourably than if it does.
Well, I mean, we know that we've talked about national capitalism on this podcast a lot, particularly with Russell Napier, who's been on several times. And this is a new era of exactly that, where and the tariff is just one symptom of people wanting to retreat and protect their own above above others. And of course, we've heard in the UK endlessly about how our pension assets, our ISA assets, etc., should be brought back to the UK and used to help rebuild the UK's infrastructure. And we're hearing that in other countries around the world. So this is a shift that combines nicely with the idea of some possibility of capital control. So it's just a very different environment. It's very unfamiliar to everybody. 80 years there hasn't been a trade war, and there hasn't been this kind of sense of national capitalism for many decades either. So very, very, very hard to see how things can unfold from here, because, of course, this kind of thing has never happened inside a global economy that is not just so globalized, but also so financialized. Financialized? Is that a word?
Yeah, actually, well, yeah. I
thought I missed a syllable in it. It wasn't quite long enough.
Yeah.
And that brings us back, of course, to the bond market, which is the thing that apparently made Trump blink or not blink. Who knows?
Bond market moves were interesting, but beyond that, I mean, honestly, no one seems to know exactly what was driving it all. There's a thing called the basis trade in the US, which I'm not going to even try to explain because I basically don't know what it is either. But
well, I will tell you what, our colleagues and competitors over at Odd Lots have explained this very well. So we will put in our show notes a link to what they have done, and you can go and see what the basis trade is there rather than John and I suffering through trying to explain it.
Yes. I mean, but you can sort of see it as America's LDI. Basically, leverage positions that blow up and then force things to get sold when you don't want to sell them. But to be fair, I mean, the 30-year bond yield went back to where it started today by the end of the session yesterday, having blown out once the tariff stuff got changed. Bond markets are a problem, but I'm not sure of their actual disciplinary powers, especially not over somewhere like the US. It'll be interesting to see.
Yeah, I mean, it seems to me that the bond market business is simply a reminder to us of something that, again, we've talked about on this pod quite a lot. I don't know if you remember when we had Edward Chancellor on the main pod as an interviewee. One of the things he said was that you should always worry about interest rates having been low for so long, and it would take ages to see where the problems are and the full consequences of the GFC and of COVID, etc., because these very low interest rates get into all the cracks and you never know where it's going to blow. And the fragilities in the system from our very, very long low interest period remain. And there will be places where it will blow, and we won't know where and how. And I think what's happened in the bond market over the last few days is a reminder that there are these fragilities built into the system that we can't identify until they go horribly wrong.
Yeah, I think that's a really good way of putting it. People are always talking about the kind of reduced liquidity and the increased dependence on central banks generally, which has, been a big problem. We spent a long time suppressing a lot of stuff, and it kind of needs to come out somewhere eventually, and it looks like that's the point that we're at now.
Deep sigh all around.
Well, I mean, on the upside, markets wise, it's basically playing out as we'd expected. As the rest of the world catches up with the US after years in which the S&P 500 was the only game in town. You own a bit of gold, you own some cash to take advantage of the opportunities when they come about. You can look at, on the bond side of your portfolio, you can look at that, depending basically what you need in terms of income, your kind of tax rate, how close to retirement you are, etc., etc. You should be basically comfortable as long as you've thought things through and you're investing regularly. And
as long as you understand, I think, at this point, that you mustn't listen to markets.
Yes.
You know, we're always being told markets contain all the information. Markets are very clever. Markets are sending you messages. I'm not sure that markets have been sending us very accurate messages over the last week. So don't listen to markets. They don't really know any more than you do. And also, I suppose we've talked again on this podcast, we've talked previously about how terrible forecasts are and how almost everybody's forecasts are almost always wrong. Forecasts are always wrong. They will be even more wrong than usual for the next little while, because no one can begin to understand what would happen. Even if things stopped right now and stayed as they are and we knew these were the tariff rates and that was that and there was no further change, it would be impossible to forecast what would happen with all the moving parts. But given that we know that everything is subject to more and more and more change and constant uncertainty, which of course is Trump's USP, this uncertainty that he creates around him, it's impossible to forecast everything. So that's important. And the final thing I want to say on this, the final thing is that you are so close, John, so close to your headline. The one that I know you're going to use at some point. Say thank you to Trump for your low mortgage rate. Right? Say thank you to Trump. You're so close. So close.
Give it time. Give it a couple more weeks. Time.
As soon as UK rates come down, for whatever reason they come down, I guarantee John's going to use that headline.
Definitely.
Thanks for listening to this week's Merryn Talks Money debrief. Not a bonus, not an emergency, just a normal debrief. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. This episode was produced by Moses Andam. Questions and comments on the show and all our shows are always welcome. Forecasts, not so much. Our show email is merrynmoney@bloomberg.net.